What I want to spend some time on today in response to the request that we had in the feedback forums is spend more time on some of the time and sales patterns as these stocks are breaking support and resistance on the 2-day, so you can see what kind of patterns make for good entries as well as exits as they hit the next likely support and resistance regions, and how you would manage the trade from start to finish. So we'll see how that works. We want to get these stocks, again, it'll take 4, 5, 8 minutes for them to punch out to new 2-day high lows. Right now they're consolidating, doing the open range. During this time frame, what's the drill? What's the first thing that you're doing here?
Look at the sectors.
Yeah. You're clicking that PCT header column on your sector quote box so that you can see which sectors are opening up relative strength from the current trading session. Remember, everything is, it's like a horse race, and they all start off at the opening gate zeroed out. That's why you don't have percent change calculated from previous close, which is the default for virtually every trading platform. You need to have it calibrate from the current day's open so that you have a relative strength barometer for your sectors, right? Everything starts off equal. You want to see which ones are starting to take an early lead and then drill down into the stocks within those sectors, in addition to keeping your gap stocks under close surveillance as you're clicking through 4, 5, 6 tickers for stocks that are making gap plays. Okay. Right now they're buying retail, so we might want to go take a look at Sears, right, and see what it's doing as, trying to get the tape. I'm used to using a lot of monitors. I'm trying to get it all in one here. Okay. What are some other retail sector stocks? Walmart,
Lowe's,
Costco, Lowe's, Best Buy, Bed Bath & Beyond, right? Sears Holding is probably the best volatility one there. We're going to see where it moves here. And again, the tape only becomes useful, or primarily becomes useful on the entry side of the equation if and when stocks are taking out, what? New 2-day highs or lows. As long as it's inter-range here, the story of the tape isn't too interesting. It's not of technical significance. We keep an eye on it, but it's not going to be used to make an entry decision unless or until that stock takes out new 2-day highs or lows. Okay, let's see what else. What's the next thing you do? Let's see. I don't like the previous day's lack of volatility, but 49.3 or 4 would be the technical short if it consolidates here at 49.5 first and then continues on down. But I wouldn't be likely to trade this because of that, right? Remember that the people who trade a stock tend to be the same group of traders from day to day, right? You have the same group of market makers, institutional traders, hedge fund makers, and the retail crowd that trades a similar stock. So you have to use that price elasticity as a key barometer as to whether or not that stock's likely to exhibit tradable volatility in the current session. We're not going to see much out of the listed market on open. That one gets what? That one gets deleted because it's not interesting. See, here's PHM. How would you trade this? PHM. And again, this is the process you go through, step by step, exactly the speed that I do it and the way that I do it. What would be your trigger in that? And 45 1/4, 45.3 on the upside, right? Where would your short trigger be in this? Very high risk, 44.3, but that would be very high. That would only be a C grade trade, right? An A grade trade would be the break on the upside over the 45. Because your exhibit, and again, if you're trying to close the window here from 40, your trade potential is likely only going to be to the 44. So is your risk reward worth it for 0.3? No, you want to have at least 0.6, 7, 8 type of a trade expectation out of that chart before you want to venture forth and fire off a trade. So this would not be a good short candidate. Sepracor looks like it's breaking. Let's keep an eye on its tape and see if it's able to clear this 54.7. It's currently consolidating here. One of the things that I would like to see, and this stock looks like it's going to drop, keep an eye on the most recent forming candle, on the 1-minute candle, to get an immediate buy or sell feedback signal from that stock's price, right? It's going to twinkle red or twinkle green and form itself during that minute, which is nice. It's forming during that. It doesn't wait until it aggregates 1 minute of data to print a green or red candle. It forms the color of the candle while those prints are collecting. So you can see this stock is likely to drop, right? We're going to see if it takes out, let's say 54.7 on the upside. On the sizes column here too, right, we'd want to see the left number consistently be larger than the right number for a long. Do you see how we have some sell pressure here, 28's on the right, which is the ask side of the equation, which is pushing the stock down a bit, right? Again, the sizes is very much a secondary indicator, but it's still useful. You want to keep an eye on kind of an air-fuel mixture ratio in a carburetor. Is it running rich or poor? Is it running long or short in the sizes column, right? And that's a good analogy. You want to see if we're running long or short bias by what, say, 8, 10, 12, 15 seconds worth of data, a representative sample of data is telling you. A key concept for using time in sales is representative sample size. It's not enough to look at 1 or 2 or 3 prints or see a single block trade. You want to see a string of process data, of transaction flow data. You want to see what's going on, the pattern of the tape, right? That you need to read the pattern of the tape and see what's happening over an 8 or 10 second time frame, right? So we will see where that one moves. You can see overall they're showing more sell pressure, and hence the stock is dropping. Pretty obvious, right? Everybody get that? So everybody see how the right side, our ask size is maintaining, and if we scroll back, here's another great technique. What I want you to do is go back and scroll back through, say, the last 2 or 3 minutes worth of tape data to see what was happening as the stock either broke out or dropped into its range, right? So by that I mean, you click back here and see what's going on. And you're asking yourself, overall, were the numbers on the left or the right larger? Okay, as a pattern data set, you can see the numbers on the right indicating sell pressure were larger, right? So you do that just to get a clear picture of what a sell tape looks like as that stock moves. Okay, everybody clear on that? Again, it's all, like Steve says, the market tells you. I mean, that it's right there in front of you. I mean, the market just told us what was going to happen, right? The data is there. The challenge is most people haven't been taught how to interpret the data. So that's what I want to do, is make those linkages so you know what to look for and what its significance is, right? What the priority of those signals are. Because you're going to have 8 or 10 signals. You've got sectors and as composite. You've got the current open range breakout of that particular stock. You need to know how to rank order the importance of those data signals as you're making a go, no-go, long, short, or sit-out decision for that particular stock, right? Anyway, good example. Let's see. Let's take a look at Yell here. We'll see if it takes out that 42.7. You see, again, this is a good example of a stock where, it didn't take out 42.7, right? It went down to just under the whole number to within that noise level of a quarter or 0.3, just under the whole number, didn't take out what would be a short trigger, right? Because they run it to a support level, it chops around, it may have some spillover to the downside, a quarter point or so. That's why you don't short right under the whole number, right? You wait for a 42.7 and see if it breaks support. So that's how you use whole numbers. Is this a good tape to go long in? Would you go buy this stock? The only type of bounces I like are if it has a long, sharp drop, maybe a major 3-line break continuation, and then starts to recover by at least 3/8 of a point. You might want to make mental note of that. 3/8 point off the bottom of a sharp drop would be the earliest at which, recovery of at least 3/8 point would be the earliest at which I would consider a bounce. I don't encourage you to be bounce traders, but for those who are doing maybe 10% or less of your total trades should be fades or pivots or going against the major breakout direction, I'd want to see a recovery of at least 3/8 point after it's moved to the edge of its average trading range, right? So if a stock has a 3-point range, it's moved that range on the open, then it's starting to get recovered, say 3/8 of a point bounce, that would be the earliest that I look at for long. I wouldn't be a buyer of this stock. It may well bounce, but what's the trade potential is it may move up to here, but 44 is major resistance.
So if it goes to 44.60, it would, and the volume came in, and you should go long with that stock.
I would go 44.35. I wouldn't see any reason to be too conservative. If it's able to break 44, that's a significant technical event. So if it's able to break that previous resistance and get over the whole number by at least 3/8 or so. That would be a good upside move. But the best trade in this would be, say, 42.7, 42.4 in a short, right? For now, it's going to consolidate and go sideways. So let's look at another one. Okay, Valero. Where's the trade? Where is, now let's see. Okay. No good fade there because that's immediate support, right, at the 112.6, the previous side of the cup, right? So it's going to drop there, but it's very likely to go sideways somewhere between 112.4 and 112.8. So that's what the odds would favor. It's going to slow down its movement here momentarily. So I wouldn't short that stock, right? I wouldn't make money shorting that stock. I don't think so. If it had a consolidation, let's say it tried to test and take out 114 and failed and start to drop under previous support here, then that, yeah, I'm again visually mapping out the stock here. If it goes up there and then starts to fade later, then I'd fire off the short, and that would be the trade right here. That would be the earliest at which I would short that stock if it does that. Best play, though, would be a long later over, say, 114.3, right? And again, you should be able to deconstruct and know how you would trade these stocks with that exact speed. That's exactly how I would trade the stock, and that's what you need to get at. So let us turn you loose for a minute here. I want to give you a couple of minutes to do some scanning on your own. Just a few minutes because I've got a lot to cover, but I want to stop talking for a minute and give you folks a chance to work with each other and do some scanning with your computers, so I want this to be hands-on. I want you to go through and identify, say, 2 different stocks that are currently breaking. They have to be 2-day high-low or gap plays, and I want you to identify your entry triggers for those long and short. Okay, so let's take just 5 minutes or so, 5 to 8 minutes, and the room comes alive with the sound of traders quickly scanning to see what's worth a trade. 2 stocks, long and short, for new stocks that are taking out 2-day high or low or gap continuations.